Today, GameStop shares soar after the video game retailer said it would invest in Bitcoin. Fidelity Digital Assets says it's testing a stablecoin. And economist Matt Sekerke weighs the pros and cons of the Genius Act stablecoin bill. Welcome to CNBC's Crypto World. I'm Katie Tarasev. Crypto prices trading lower today, with Bitcoin falling back to the $86,000 level as of noon Eastern. Ether fell just under 3%, but still traded above $2,000. And XRP dropped more than 1% to just under $250. The moves lower come as investors still wait for clarity on President Trump's tariff plans, especially as the April 2nd deadline looms. In an interview yesterday, the president said tariffs will likely be more lenient than reciprocal. The comments came as investors fear the more severe approach previously signaled by the Trump administration would dampen consumer and corporate sentiment enough to slow the U.S. economy. Okay, let's talk about the top stories. GameStop shares soaring after the company said it would invest in Bitcoin, in a move that's similar to what the company's strategy has been doing for years. Yesterday, the video game retailer announced its board agreed to add Bitcoin as a Treasury reserve asset. CNBC reported these plans last month after the company's CEO, Ryan Cohen, posed next to strategy executive chair Michael Saylor in a photo posted to X. So how much Bitcoin does GameStop plan to acquire? That's still unknown, but as of February 1st, the company had around $4.8 billion in cash. By noon, GameStop shares surged more than 14%. Next, we have an update for you on a story we first mentioned in yesterday's show. Ripple and the SEC have reached an agreement to end their long-running legal battle over allegations the crypto company offered unregistered securities. In a post on X yesterday, Ripple's chief legal officer said that following last week's development, the SEC would drop its appeal without conditions, and that the firm has now agreed to withdraw its cross-appeal. He added that the SEC will keep $50 million of the previously imposed $125 million fine. The remaining balance will be returned to Ripple. He also said that the agency will request that the court lift the standard injunction currently in place. The resolution remains subject to a formal commission vote, finalization of legal documentation, and standard court procedures. Once all that's done, the case will be closed in full. The deal reflects a growing trend in Washington under the new administration toward easing crypto enforcement and supporting digital assets. An SEC spokesman declined to comment or confirm the details of the deal to CNBC. Finally, Fidelity Digital Assets is testing a stablecoin. A company spokesperson also told us Fidelity regularly scans and tests new opportunities to meet the evolving needs of customers. Right now, there's no official word on a potential launch. Just yesterday, we told you President Trump's crypto project, World Liberty Financial, is joining the increasingly competitive stablecoin market with a new dollar-pegged token. That company joins others, like Ripple, which launched its stablecoin late last year. And this all comes amid momentum in Congress to pass a stablecoin bill, which has been one of the first crypto legislation priorities. Separately, according to this Friday filing with the SEC, Fidelity is proposing a tokenized money market fund offering, joining the race for tokenized assets. The fund, which is a blockchain-based version of Fidelity's US dollar money market fund, currently uses the Ethereum network, but could expand to other blockchains. If approved, the product is expected to become effective on May 30th. All right, back to stablecoins for our main story. All eyes are on these tokens as the DC Blockchain Summit is underway today with a focus on regulation for digital assets. Crypto World's Mackenzie Sigalos spoke with economist Matt Sekerke about the Genius Act stablecoin bill, which recently cleared the Senate Banking Committee. He lays out some of the positive aspects of the bill as well as some concerns.
So we have Congress working through potential stablecoin legislation, with the Genius Act getting the most attention right now. There are things like reserve requirements, registration requirements, all being looked at in this bill. From your perspective, does the Genius Act focus on the right problems that need to be solved?
It does some things very well. It's great to see that there are full reserve requirements, that the regulators that are involved are well empowered and the right ones for the sector. What seems a bit strange to me is the dual track of federal and state regulation in the bill, which seems redundant. The states are allowed to impose their own regimes, which are supposed to be substantially equivalent to the federal regime, which begs the question, why do we need to have two? The bill also goes light on verification for the reserves. Within the stablecoin world, there's always been a preference for attestation as opposed to auditing, which is a lower standard of verification for an external accounting firm to use to determine that the reserves are present and that appropriate controls are available. I also like that the institutions involved are required to abide by anti-money laundering requirements. A major concern is whether money can flow into the U.S. financial system through stablecoins, and having chartered institutions that can be gatekeepers in that respect is a very positive outcome.
Now, one concern that we've heard brought up by some in the industry is that this could potentially place a bigger burden on U.S.-based companies than foreign ones. What's your perspective on that argument?
Yeah, that's not something that's obviously contemplated in the bill. And there are major stablecoin issuers headquartered outside the United States. If they were subject to the civil penalties in the bill for noncompliance, they operate at a scale that those penalties are not likely to deter their activity. They would just likely regard it as a cost of doing business and go on as they are. But I do think a positive aspect of the bill is that it focuses on stablecoins being tied to the US dollar as the activating impulse behind the bill, rather than the fact that US citizens are using them or US persons are touching them in one way or the other.
Now, you have a book coming out soon focused on restoring strength in the financial system. Do stablecoins have a role in something like that or no? And is there room for a CBDC that could potentially solve some of the issues you mentioned around stablecoins and reserve risks?
I think the main thing to consider in terms of the larger financial system is how do stablecoins, how do other kinds of crypto products interact with the regulated banking system? Most of the money supply comes from the regulated banking system, and a risk of stablecoins as well as CBDCs is that some of the balances that would normally be held in bank deposits migrate out into stablecoins or into accounts held directly at the central bank as the issuer of the CBDC. It's important that banks are able to continue to create deposit funding. It's really just a major spur to growth in the developed world for the banking system to be central in that way. On the other hand, stablecoins can potentially catalyze some competition in payments, particularly in the credit card payments area, where it's very expensive for merchants to accept credit cards, but they have very little recourse against consumers who generally prefer to pay that way.
Some of the credit card companies have been pretty progressive on the stablecoin front. I'm thinking of Visa and some of their initiatives in the Web3 space. Talk to me about what that might look like, this merging of the TradFi world with stablecoins. I'm thinking about the credit card companies, but I'm also thinking about the banks now that SAB 121 has been rolled back by the SEC, and what that might mean with respect to banks being able to custody cryptocurrencies.
Yeah, it's not surprising that Visa and MasterCard are way out ahead in terms of the technology. They have a major market position to protect, and they need to be able to switch on and compete in whatever forum that's taking place. We may see banks becoming major players in the space as well. They're kind of natural issuers of stablecoins, and it's a way for them to keep deposits in by being the issuer rather than just custodying deposit reserves for external issuers.
One question that's come up for me is this idea of how does a digital dollar vary from a fractionalized dollar held by a bank that is theoretical on your bank statement or something that you see online versus a stable coin versus potentially a CBDC issued by the Fed. I think these different variations of what you think of as a digital dollar.
Yeah, they differ in the plumbing, and it's for the user, there's not much difference, but for the ultimate transfer of value, there are fine points in how things get settled at the end of the day. One of my concerns with stable coins is that you're working through a variety of settlement systems to transfer value from one to another. If both the payer and the recipient are not on the same stable coin. And stablecoin balances are meant to be transferred instantly and irrevocably, but the value behind them moves at a slower pace. So in a stress situation, I wonder whether financial flows that are backing the stablecoins can keep up with the stablecoin flows on top, and whether that could precipitate other kinds of fragility within the financial system. I don't mean to be alarmist about it, but it's an area for concern, and it's probably going to spawn different management practices among stablecoin issuers in how they balance their backing portfolio to favor liquidity versus return.
So obviously our new congressional session is really focusing a lot on stablecoin legislation. What do you think their focus should be on with respect to overall crypto legislation and regulations moving forward? Or do you think we're at the right starting point here?
I think really there's almost too much attention being given to crypto at the moment. It's no secret that the industry spent heavily in the last elections, and now they're looking to reap the rewards of that spending. My personal view of the ultimate footprint of crypto in the financial system is fairly small. And we have very pressing issues outstanding with regard to bank regulation. We have the status of the Federal Reserve under pressure from the current administration. We have a major budget deficit with no sign of resolution and really no seriousness about how we're going to resolve that. As the issuer of the world's reserve currency, our first priority should be shoring up the dollar, ensuring that we get through the Basel III endgame in a coherent and reasonable way, and that the budget is agreed and reduces the trajectory of our debt without resorting to accounting gimmickry or just plain misdirection.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.